Question 1. Which of the following is NOT, a type of cyber threat commonly covered under cyber insurance policies? A. Malware. B. Phishing and social engineering. C. Denial of service DOS attacks. D. Vehicle theft. Answer: D. Vehicle theft. Explanation: cyber insurance primarily covers cyber threats related to digital systems and networks. Malware, phishing, and DOS attacks are typical cyber threats covered under policies as they directly impact digital infrastructure and data security. Vehicle theft, however, is a physical security risk, not a cyber risk, and is not covered under typical cyber insurance policies. Cyber policies focus on digital liabilities, data breaches, and network security risks, among other cyber-related issues. Question 2. Mr. Davis operates a small business and recently experienced a ransomware attack where critical customer data was encrypted and the attackers demanded a payment. What should Mr. Davis do to best align with his cyber insurance policy? A. Pay the ransom immediately to prevent further data loss. B. Notify his cyber insurance provider and begin a forensic investigation. C. Attempt to decrypt the data using free online decryption tools. D. Ignore the attackers and continue normal operations until the issue resolves. Answer: B. Notifies cyber insurance provider and begin a forensic investigation. Explanation: in the event of a ransomware attack, the first step is to notify the cyber insurance provider. This ensures that the incident is covered under the insurance policy. The insurer will typically initiate a forensic investigation to assess the situation, determine the scope of the breach, and provide support for mitigation. Paying the ransom, option A, may not guarantee data recovery and could even encourage future attacks. Using free decryption tools, option C, can be risky and potentially worsen the situation. Ignoring the attackers, option D, is a dangerous approach as it may lead to further data loss or legal implications. Question 3. A company is considering purchasing a cyber insurance policy. The insurer asks about the company's existing cybersecurity posture. Which of the following factors would most likely affect the insurer's decision to offer a lower premium for the company? A. The company has a strong incident response plan and regular employee training. B. The company has experienced multiple cyber incidents in the past year. C. The company stores all sensitive data on an unencrypted local server. D. The company operates in a high-risk industry with frequent cyber threats. Answer A. The company has a strong incident response plan and regular employee training. Explanation: insurers typically offer lower premiums to businesses that demonstrate a proactive approach to cybersecurity. This includes having a strong incident response plan and regular employee training, which are considered risk mitigation strategies. These measures reduce the likelihood of a cyber attack succeeding, thus lowering the insurer's exposure. Past cyber incidents, option B, poor data security practices, option C, and operating in a high-risk industry, option D, are likely to increase premiums as they present higher risks for the insurer. Question 4. Which of the following is a primary factor in determining the premium for a cyber insurance policy? A. The size of the company's workforce. B. The company's location and the prevalence of cyber threats in the region. C. The company's history of cyber incidents and claims. D. The physical location of the company's offices. Answer: C. The company's history of cyber incidents and claims. Explanation: a company's history of cyber incidents and claims directly affects its cyber insurance premium. Insurers assess the likelihood of future incidents based on past events, and frequent claims can indicate a higher risk, leading to higher premiums. While company size, location, and workforce may play a role, the primary factor is the claims history as it reflects the business's cybersecurity posture and vulnerability. Factors such as physical location, option D, are less relevant to pricing unless they correlate with regional risk factors. Question 5. A cyber insurance policy includes coverage for business interruption due to a cyber attack. Which of the following would NOT typically be covered under business interruption coverage? A. Lost revenue due to an attack that prevents customers from accessing the company's website. B. The cost of repairing the company's servers and restoring data. C. Salaries of employees who are unable to work due to the cyber incident. D. Losses resulting from damaged physical assets like office furniture or equipment. Answer: D. Losses resulting from damaged physical assets like office furniture or equipment. Explanation: Business interruption coverage in a cyber insurance policy is designed to cover losses related to disruptions caused by cyber incidents such as lost revenue, option A, restoration of services, option B, and employee wages, option C. However, physical asset damage such as office furniture or equipment, option D, would typically be covered under a property insurance policy, not a cyber insurance policy. Cyber insurance focuses on financial losses directly related to digital incidents. Question 6. Which of the following is most likely to trigger a data breach liability claim under a cyber insurance policy? A. A company's server crashes due to hardware failure causing downtime. B. Employees inadvertently send an email containing sensitive customer information to the wrong recipient. C. A hacker gains unauthorized access to a company's database and steals customer data. D. A vendor fails to deliver software updates leading to performance issues. Answer: C. A hacker gains unauthorized access to a company's database and steals customer data. Explanation: the data breach liability claim is typically triggered when unauthorized individuals access sensitive data, such as customer information. In this case, the hacker's breach, option C, would lead to a claim under the policy. Other incidents such as server crashes, option A, inadvertent employee errors, option B, or vendor failures, option D, may result in different types of claims but are not specifically related to data breach liability, which pertains to unauthorized access and exposure of personal or sensitive information. Question 7. Which of the following best describes the role of a cybersecurity expert in a cyber insurance policy claim? A. To determine the amount of the insurance payout based on company losses. B. To perform forensic analysis and help identify the source and impact of the cyber event. C. To negotiate with cyber criminals to reduce ransom payments. D. To ensure compliance with all local laws regarding employee data usage. Answer: B. To perform forensic analysis and help identify the source and impact of the cyber event. Explanation: in the event of a cyber insurance claim, a cybersecurity expert plays a crucial role in forensic analysis. They help determine the scope of the incident, identify the source of the attack, and assess the impact on the business. Their findings are crucial for determining coverage and ensuring that the claim is processed properly. While they may advise on legal and compliance matters, option D, their primary function is not to negotiate with cyber criminals, option C, or determine payout amounts, option A. Question 8. Which of the following is most commonly included in a first-party cyber insurance coverage policy? A. Legal defense costs related to a third-party data breach lawsuit. B. Ransomware-related payments to cyber criminals. C. Cyber extortion expenses and response costs. D. Regulatory fines imposed due to non-compliance with data privacy laws. Answer: C. Cyber extortion expenses and response costs. Explanation: first-party cyber insurance coverage typically covers losses directly incurred by the insured due to a cyber event. This includes cyber extortion expenses such as ransomware payments and the costs associated with responding to and mitigating the attack. Legal defense costs related to third-party lawsuits, option A, and regulatory fines, option D, are typically covered under third-party coverage. Although ransom payments, option B, may be included in first-party coverage, this is often considered a specific category of cyber extortion. Question 9. Which of the following best describes a key challenge in underwriting cyber insurance policies? A. Determining the physical location of a company's assets. B. Accurately assessing the cybersecurity measures and risk mitigation strategies of a business. C. Verifying the company's market share and industry growth rate. D. Estimating the total market value of the insured business. Answer: B. Accurately assessing the cybersecurity measures and risk mitigation strategies of a business. Explanation: one of the primary challenges in underwriting cyber insurance is accurately assessing the cybersecurity measures and risk mitigation strategies in place at a company. Unlike traditional insurance, where physical risks are easier to quantify, cybersecurity risks are dynamic and vary widely between companies. Insurers need to evaluate factors such as the strength of a company's security systems, employee training, and incident response plans to determine the appropriate premium and coverage. Physical asset location, option A, and market share, option C, are not as critical for cyber underwriting, and market value, option D, does not directly influence cyber risk assessment. Question 10. Mr. James operates a small law firm and wants to purchase cyber insurance. He is concerned about a potential data breach involving his client's confidential information. Which of the following steps would most help Mr. James reduce his premium for cyber insurance? A. Store client data in an unprotected local database. B. Implement multi-factor authentication and employee cybersecurity training. C. Decrease the size of the firm to reduce potential exposure. D. Do not back up any data, assuming nothing will go wrong. Answer: B. Implement multi-factor authentication and employee cybersecurity training. Explanation: to reduce his premium, Mr. James should take proactive steps to strengthen his cybersecurity posture, implementing multi-factor authentication (MFA) and providing cybersecurity training to employees demonstrate a commitment to risk mitigation, which can lead to discounts on premiums. Storing data unprotected, option A, and failing to back up data, option D, would increase risk and likely raise premiums. Reducing the size of the firm, option C, does not directly impact the firm's cybersecurity risk. Question 11. Which of the following scenarios would most likely trigger a cyber liability claim under cyber insurance policy? A. A company's website is temporarily unavailable due to a technical issue unrelated to a cyber attack. B. An employee accidentally sends an email containing sensitive company information to the wrong recipient. C. A company's customer database is accessed by a hacker who steals personal information. D. A software update is delayed, causing a temporary decrease in system performance. Answer: C. A company's customer database is accessed by a hacker who steals personal information. Explanation: a cyber liability claim is most commonly triggered when unauthorized access to sensitive information occurs. In this case, the hacker stealing customer data would likely lead to a data breach claim. The other options, A, B, and D, involve incidents that do not directly result in cyber liability claims for breach of data or system integrity. Question 12. Which of the following would be considered a first-party cyber insurance coverage? A. Legal fees incurred due to a customer lawsuit resulting from a data breach. B. Costs associated with notifying customers about a data breach. C. Regulatory fines for non-compliance with data protection laws. D. Losses suffered by third parties due to a data breach. Answer: B. Costs associated with notifying customers about a data breach. Explanation: first-party coverage in cyber insurance refers to losses suffered directly by the insured business. The cost of notifying customers about a data breach is a first-party expense. The other options are related to third-party claims, A, D, or regulatory fines, C, which are typically covered under third-party coverage or a separate regulatory compliance policy. Question 13. Which of the following is typically excluded from a cyber insurance policy? A. Ransomware payments made to hackers. B. Costs associated with a data breach affecting personal health information. C. Damages resulting from a deliberate cyber attack by the policyholder's employees. D. Expenses for hiring a forensic team to investigate a cyber event. Answer: C. Damages resulting from a deliberate cyber attack by the policyholder's employees. Explanation: cyber insurance policies generally exclude coverage for deliberate acts by the policyholder's employees. If an employee intentionally causes a cyber attack, the policy would not cover the resulting damages. Ransomware payments, A, data breach costs, B, and forensic investigation expenses, D, are typically covered under cyber insurance policies. Question 14. In a cyber insurance policy, what is the purpose of the cyber extortion coverage clause? A. To cover the cost of repairing physical infrastructure damage during a cyber attack. B. To reimburse the company for lost revenue due to website downtime caused by a cyber attack. C. To cover the costs related to responding to ransom demand, including the ransom payment itself. D. To pay for the legal defense against lawsuits arising from a data breach. Answer: C. To cover the costs related to responding to a ransom demand, including the ransom payment itself. Explanation: cyber extortion coverage provides financial protection for a company in the event of a ransom demand, including the costs of responding to the demand and, in some cases, the payment of the ransom itself. It does not cover physical infrastructure repairs, A, lost revenue due to downtime, B, or legal defense costs, D. Question 15. Which of the following is typically NOT included under cyber insurance policies business interruption coverage? A. Loss of income due to a cyber attack that disrupts operations. B. Expenses incurred to restore normal operations after a cyber attack. C. Wages for employees who are unable to work due to system outages. D. Fines imposed by regulators for failure to comply with data protection laws. Answer: D. Fines imposed by regulators for failure to comply with data protection laws. Explanation: Business interruption coverage is designed to cover financial losses related to operational disruptions caused by a cyber event. This includes lost income, A, recovery costs, B, and employee wages, C, however, fines for regulatory non-compliance, D, would not be covered under business interruption coverage. They are usually addressed under separate coverage related to regulatory defense or fines. Question 16. When purchasing a cyber insurance policy, what is one key factor insurers typically consider to assess risk? A. The amount of revenue the company generates annually. B. The number of physical locations the company operates. C. The strength of the company's cybersecurity protocols and data protection measures. D. The company's reputation in the industry. Answer. C. The strength of the company's cybersecurity protocols and data protection measures. Explanation. Insurers assess risk based on the company's cybersecurity posture, including protocols such as firewalls, encryption, multi-factor authentication, and employee training. A company's cybersecurity measures, C, are a primary factor in determining premiums, while revenue, A, and the number of physical locations, B, may play a role. They are less directly related to cyber risk. A company's reputation, D, is typically not considered a risk factor for cyber insurance. Question 17. What is data breach notification in the context of a cyber insurance policy? A. A process in which an insurer informs the business of its premium renewal. B. The requirement to inform customers and regulators when their personal data has been compromised. C. The notification made to vendors to alert them of a potential cyber threat. D. A service provided by the insurer to notify customers on behalf of the business. Answer. B. The requirement to inform customers and regulators when their personal data has been compromised. Explanation. Data breach notification refers to the legal requirement for businesses to inform affected individuals and regulators when personal data has been compromised due to a cyber attack. This notification process is often covered under a cyber insurance policy, which helps businesses manage the costs and legal requirements of informing affected parties. Options A, C, and D do not relate directly to data breach notification in the context of cyber insurance. Question 18. Which of the following would be covered under a cyber insurance policy's network security coverage? A. Damages caused by a denial of service attack. B. Costs associated with retrieving lost physical assets. C. Legal defense for a customer lawsuit due to a data breach. D. Theft of physical hardware like laptops or servers. Answer A. Damages caused by a denial of service attack. Explanation. Network security coverage in a cyber insurance policy typically covers damages caused by cyber attacks that disrupt or compromise a company's network. This includes denial of service (DOS) attacks which flood a system and cause it to become unavailable. Legal defense costs, C, and theft of physical assets, D, are generally covered by other policies such as general liability or property insurance. Retrieving lost physical assets, B, is not part of network security coverage. Question 19. Which of the following is an example of a third-party liability coverage under a cyber insurance policy? A. Loss of income due to a ransomware attack. B. Data breach notification costs for customers affected by a breach. C. Legal defense costs for lawsuits resulting from a breach of customer data. D. Forensic investigation expenses to determine the cause of a cyber event. Answer. C. Legal defense costs for lawsuits resulting from a breach of customer data. Explanation. Third-party liability coverage under cyber insurance policy covers costs associated with legal defense and damages when the business is sued by third parties such as customers or vendors due to a data breach, loss of income, and forensic investigation. D. Are part of first-party coverage, and notification costs, B, are related to breach response, which also falls under first-party coverage. Question 20. A company purchases cyber insurance to protect against the risks of a data breach. Which of the following would likely not be covered by the policy? A. Costs of legal representation in a data breach lawsuit. B. Damage to physical property caused by a cyber attack. C. The cost of restoring lost or corrupted data. D. Payments to victims of a cyber extortion scheme. Answer. B. Damage to physical property caused by a cyber attack. Explanation. Cyber insurance policies typically cover digital risks, such as data breaches, legal costs, data recovery, and cyber extortion. However, damage to physical property, such as physical assets damaged during a cyber attack, is generally not covered under cyber insurance. This type of damage would be addressed by property insurance instead. Question 21. Which of the following would most likely trigger a cyber liability claim under a cyber insurance policy? A. An employee's personal device is used to access sensitive company data without proper authorization. B. The company experiences a temporary server outage due to routine maintenance. C. A cyber attack results in the loss of customer data and the company cannot notify all affected parties within the required time frame. D. A company fails to update its software, resulting in a slow system response time. Answer: C. A cyber attack results in the loss of customer data and the company cannot notify all affected parties within the required time frame. Explanation: cyber liability claims typically arise from data breaches or incidents where sensitive information is compromised. In this scenario, a cyber attack that results in the loss of customer data and the failure to notify affected individuals within the required time frame would trigger a claim under the policy. Question 22. Which of the following would not be covered under a typical cyber insurance policy's cybercrime coverage? A. Losses due to wire fraud. B. Losses resulting from an employee impersonating an executive to authorize fraudulent payments. C. Losses caused by a third-party hacker accessing customer payment data. D. Losses incurred due to the theft of physical hardware containing sensitive data. Answer: D. Losses incurred due to the theft of physical hardware containing sensitive data. Explanation: cybercrime coverage in a cyber insurance policy typically covers financial losses resulting from cybercrimes such as wire fraud, A. Employee fraud, B. And third-party hacking, C. However, the theft of physical hardware, D. Like laptops or servers containing sensitive data, is generally covered under property insurance, not cybercrime coverage. Question 23. What does a data breach liability coverage under cyber insurance policy typically protect against? A. Legal costs and expenses resulting from lawsuits filed by customers whose personal data has been compromised. B. The cost of restoring lost or corrupted data following a cyber attack. C. The expense of notifying customers and regulatory bodies about a data breach. D. Ransom payments made to cyber criminals demanding payment for stolen data. Answer: A. Legal costs and expenses resulting from lawsuits filed by customers whose personal data has been compromised. Explanation: data breach liability coverage specifically protects businesses from the legal costs associated with lawsuits that arise when customer data is compromised due to a breach. It does not cover costs related to restoring data, B. Notifying affected parties, C. Or paying ransom, D. Which are typically covered by other types of coverage. Question 24. Which of the following would typically be excluded from a cyber insurance policy's coverage? A. Damage caused by a hacker accessing a company's internal network. B. Costs associated with restoring data lost due to a cyber attack. C. Expenses for hiring a public relations firm to manage the fallout from a data breach. D. Losses incurred due to an employee deliberately disclosing sensitive information. Answer: D. Losses incurred due to an employee deliberately disclosing sensitive information. Explanation: cyber insurance policies typically exclude coverage for intentional or criminal acts committed by the policyholder's employees. If an employee deliberately discloses sensitive information, that would generally not be covered. The other options, A, B, C, are typically included under various coverages in a cyber insurance policy. Question 25. What is the main purpose of forensic investigation coverage in a cyber insurance policy? A. To reimburse the business for legal costs related to data breach lawsuits. B. To cover the costs associated with identifying the source and impact of a cyber attack. C. To pay for the recovery of lost income due to business disruption. D. To cover the cost of paying a ransom to hackers. Answer: B. To cover the costs associated with identifying the source and impact of a cyber attack. Explanation: forensic investigation coverage helps businesses cover the costs of investigating the cyber attack's source and determining its full impact. This includes hiring experts to trace the origin of the attack and assess the damage. It does not cover legal costs, the income loss, C, or ransom payments, D, which are typically covered by other policy provisions. Question 26. Under a cyber insurance policy, social engineering fraud coverage is designed to protect against losses resulting from which of the following? A. A hacker impersonating an employee to gain access to sensitive data. B. A fraudster impersonating a high-level executive to trick an employee into transferring funds. C. A data breach resulting from an employee's weak password. D. A cyber attack that disrupts an online service provided to customers. Answer B. A fraudster impersonating a high-level executive to trick an employee into transferring funds. Explanation: social engineering fraud coverage protects businesses from losses caused by fraudsters using psychological manipulation to deceive employees. This includes impersonating executives to authorize fraudulent transactions such as wire transfers. Other types of fraud, like hacking or weak password breaches, are covered under different policy provisions. Question 27. What is typically the first step a company should take after discovering a data breach that could trigger a cyber insurance claim? A. Notify the media and customers immediately. B. Assess the extent of the breach and contain the incident. C. Pay any ransom demands to prevent further data loss. D. File a police report and wait for law enforcement to act. Answer B. Assess the extent of the breach and contain the incident. Explanation: the first step a company should take is to assess and contain the breach to prevent further damage. This includes identifying which data was compromised and taking measures to secure systems. While notification and legal reporting are also important, the immediate focus should be on containment. Paying ransom is not recommended without further investigation and typically not covered under all policies. Question 20. Which of the following scenarios would most likely be covered under a cyber insurance policy's business interruption coverage? A. A company is temporarily unable to process customer orders due to a ransomware attack on its servers. B. A business experiences a network slowdown due to a software bug that was not caused by a cyber attack. C. A company suffers a delay in launching a new product due to issues unrelated to cybersecurity. D. A company experiences a data breach due to an employee's negligence, but it does not disrupt operations. Answer A. A company is temporarily unable to process customer orders due to a ransomware attack on its servers. Explanation: business interruption coverage typically applies when an incident such as a cyber attack, disrupts the company's ability to operate normally. A ransomware attack that halts order processing would be covered as it directly impacts business operations. Scenarios without operational disruption B, C, D would not be eligible for this coverage. Question 29. Which of the following would most likely trigger a cyber extortion claim under a cyber insurance policy? A. A hacker accesses customer data and demands payment to prevent its release. B. An employee inadvertently discloses sensitive data to the wrong party. C. A business experiences a temporary website outage caused by a system update. D. A third party illegally uses company data to create a counterfeit product. Answer A. A hacker accesses customer data and demands payment to prevent its release. Explanation: cyber extortion coverage typically applies when a hacker demands payment, ransom, to prevent the release or destruction of sensitive data, such as customer information. This is a common trigger for cyber extortion claims. Employee negligence B. Technical issues C. And data misuse D would not fall under this type of coverage. Question 30. Which of the following is generally excluded under cyber insurance policy? A. A hacker accessing confidential customer data and selling it on the dark web. B. Losses resulting from a cyber attack on an employee's personal device used for work purposes. C. Losses incurred by a business due to an insider leaking confidential information. D. Legal costs related to defending a lawsuit filed by customers after a data breach. Answer C. Losses incurred by a business due to an insider leaking confidential information. Explanation: cyber insurance policies typically exclude coverage for intentional acts committed by employees, such as leaking confidential information. This is because such actions are considered deliberate and not accidental or unforeseen. The other options A, B, D typically fall under the coverage, addressing unauthorized access, data theft, and legal defense costs.